Good afternoon. Welcome back to another edition of About Everything with Neil Howe. I'm Dan Holland. We got a great topic this week. Neil wrote a fantastic column. It's up on our website right now, Hedgeye.com, called The Decline of the Film Industry and Its Investing Implications. Neil, thanks for joining us.
You're welcome. Great to be here.
So I love the article. Really interesting stuff. So talk to us. It sounds like it's a horror movie, if not a tragedy, what's going on right now in the movie industry.
Well, it's the culmination of a trend that's been underway for the last, I'd say the last 15 years, and that is this. Since the early '00s, we've seen a decline in box office revenue, and 2016 could be a particularly bad year. I know some of the movie critics are saying that per capita, ticket sales are down to down below all historical precedent. You know, they're getting down to where they were sometime before the 1920s, and before we even have numbers
Right.
for it. So we see this general decline, obviously not just in box office revenue, but obviously other forms of revenue too. Box office revenue, it is true, it is declining as a share of the total income earned from movies, as opposed to aftermarket rights and sales abroad and all that. We're just talking about domestic box office, but nonetheless, the entire industry is suffering.
Right.
And I think we go through and take a look at the different companies. Another index of how movies are doing is the fact that movie making is a declining share of revenues for most of the major public companies that include, that incorporate important film studios. It's certainly true of Disney, Viacom, even Lionsgate and DreamWorks are both declining. Comcast is obviously owning NBC Universal Studios. That's kind of a separate deal, but they're a huge company, and filmmaking is a rather small part of what they do. This is one of the particular problems of creating investable theses off of decline in film is that clearly film is for a lot of the big producers a small part in large companies that do a lot of other things.
Right.
But we went through some of the primary drivers of what's causing this problem, and in our piece, one of them, and just to do this clearly, so we can get to some questions, do this quickly. One of them is obviously tremendous new competition from television.
Yep.
There was a time back when movies were the prime entertainment, standalone entertainment for America, peaking in the 1940s and 1950s as a share of consumer income and as just a cultural centerpiece in America. There was a time when TV was still in its infancy. In the early 1960s, Newton Minow, who was the chairman of the FCC back then, famously declared that television was a vast wasteland of poor quality. And that was one of the reasons, of course, that people went to movies for really great stuff, I think that has clearly changed. Television has become better and better and better, and some people would argue that movies have actually, deteriorated in quality. I think some people would even say it's even reversed.
Right.
Today you have both not only much higher quality, but vastly more quantity. The broadcast networks are practically swamped now in new competition from not only cable TV, but these entirely new, online networks like Netflix, right? Producing vast amounts of stuff. We actually did a piece on television recently showing that in the last couple of years, networks have doubled the production of new scripted content. This is expensive content. We think ultimately there's going to be a shakeout. I think it's unsustainable. But right now, it's a kind of a golden age of creativity and new and interesting, nuanced, serious, deep drama on television. Moreover, these TV shows are designed to be more watched like movies. I think there's an interesting shift. If you look at Netflix with putting entire seasons on the up on the web at one point, they're designed to be binge watched, right? Which means that you can actually you don't, like a typical TV serial, have to kind of repeat the same, kind of like a Dickens novel coming out in serials. You kind of have to introduce all the same characters again and again and again. With these binge watch series, you can go into incredible depth, in the first 5 or 6 or 7 episodes, much deeper and more complex, in fact, that you can do in any movie. So I think television is part of what's going on.
Yep.
The second is competition from other media, and that's, of course, should be old news for everyone. I mean, mobile apps and games and YouTube, Vimeo, Snapchat, all of these things increasingly selling content with ads on them. We already mentioned the new online networks like Netflix and Hulu. There's just so much more that people can do on screens in general. It's competing for people's time. The third shift is generational change. And here's what's interesting going on age-wise in movies. The oldest age brackets, now that boomers are entering into, people in their 60s and 70s, actually has seen over the last 10 years or so, movie attendance rise in those age brackets. It's declining for young people. It's declining for young adults. Basically, starting from college age up to people in their late 30s, we actually see somewhat of a decline in actual box office receipts. So, this is a generational challenge, obviously. If it weren't for boomers indulging in their lifelong thirst, for important movie hits, the decline would be even larger than we've seen. And finally, I think there's the aftermarket cannibalizing of the box office. This started long ago when we first started coming out with DVDs, and then you sell the rights to TV. I think every movie always thought, well, now that we've kind of sapped everyone who wants to come to the box office, let's make a little extra money by selling the rights to it so it can appear later, right? That's just extra dessert. It's like extra revenue on top of everything else. But I think what's happened is, as more and more movies pursue this strategy, increasingly it's beginning to cannibalize the box office itself. So I don't know about you, Dan, but like a lot of people, I see a great movie going out and I just say, I'll wait.
Exactly.
I mean, I'm going to wait until it's nearly free, or I can pay on demand. And so the fact is that also people are watching as many movies in some cases, but paying a lot less to do so. So those are the drivers. We also talk a little bit about how studios are responding.
Right.
This is really interesting in that culture. One thing we see, and we've had several pieces on this going back a few years. It's called the sort of how the silver screen is becoming more silver, right? Which is a lot more movies starring older people. If you go back in the 1950s, particularly 1960s and 70s, it was amazing how rarely movies really showed aging people, right? I mean, it was all about, often boomers, or about, silent generation and young adulthood or whatever. It rarely showed many pictures, starring older people. Today, you see a lot more movies starring famous actors, silent generation or boomer generation, talking about really interesting plots and very deep plots about meaningful lives having been lived by these older people. I think that's a very interesting trend. How just in quantity of movies you're going after, particularly in movies which are deemed to be significant and deep, is how much of that's going after older people. I think as boomers have dominated the culture, it's almost an expectation that the deepest movies, the most meaningful movies, right, would still be targeting this generation. I think the other thing that's going on, what movies makers are doing, is that they're going young in a very different way. They're going after younger audiences, because this has tended to work with reboots and sequels, right? I mean, you see a lot of that, particularly in a lot of the comic book character movies, right? You see just constantly, again and again and again, the same things coming out.
Yep.
Boomers have always looked down on this as sort of unimaginative and kind of brain dead to come out with these sequels. Particularly, you take a great old movie and you redo it and you make a mess of it. But millennials like that; they don't mind, and they're going to that. It works to some extent. I think another thing we see going young is obviously kind of trying out whiz bang technology. We see recently, obviously, the tremendous development and investment in CGI and in sort of enhancing all kinds of weird kind of sci-fi effects in IMAX, in 3D, which obviously didn't catch on that well, and the new interesting foray, or at least attempts at investing in the future, to actually have virtual reality movies, VR movies, which is a really interesting idea. Imagine being able to watch the movie from the viewpoint of any character you choose, or to be able to walk around on set. That's really
cool.
a radical idea.
That's really cool.
And then finally, I think the most reliable strategy that we've seen is going abroad, increasingly selling to the rising middle class in countries like China and India, Malaysia, the Philippines. These are growing markets, not just demographically, but a growing middle class. A lot more of them are very used to seeing, not only them, but their parents have been very used to imbibing American culture. And I think some countries are doing this big. I think Disney is particularly taking a leading role in going into China, actually setting up in China, which China requires them to do. But I think that's another strategy. I think the way this is going to fall out, just in terms of my overall recommendations, Dan, is that I would say that the winners are going to be the larger media companies which own branded characters and storylines, because this is the reality today. Okay, and this is, and then you can ask me other questions, and we can go on from here. But the reality today is that a movie no longer stands alone. There was a time when you came out with Ben-Hur or Man for All Seasons or Lawrence of Arabia or something, the movie stood alone. I mean, it won Academy Awards or whatever, and everyone would see it and talk about it and so on. Today, a movie is just one element in the delivery of a storyline or character that is delivered to the audience in multiple different forms of media. So there will be, you think about Harry Potter, for instance, you think about Batman, whatever you think about, there will be the movie, there will be the book, the comic, the animated book, there will be the song, there will be the clothing, there will be, the toy store accessories, there will be the video game, there'll be the board game. I mean, you get my point? It is a variety of streams all moving in parallel, and the movie is just one part of it. To be successful in this new game, you have to be a large enough media company to do that, and to own these important thematic properties, these branded thematic properties. I think certain companies have done pretty well. Obviously, Time Warner, has DC Comics, so they got Batman and Superman. Comcast and Universal, they have Harry Potter. Disney has got Lucas and Marvel. They've got Pixar Studios now. We'll see what Lionsgate can do with Hunger Games and Divergent. But I think that the smaller studios are just going to have a hard time keeping up and will be absorbed. I noticed that it's as though DreamWorks is going to be acquired. I don't know what the status of that is, but by Comcast and Universal.
I was just going to say that's a good time to go into some of our questions. We got a bunch of questions in the queue. I think you mentioned, in addition to 2016, I think you wrote may end up being the worst year ever for movies. You talked about some of the investing implications for investors, and one of the interesting things I saw was you said expect movie theater operators to be hit hardest. I pulled up the charts of Regal Entertainment Group, ticker RGC, and AMC Entertainment Holdings. It's interesting. You look at the RGC chart; it just keeps going up the past 5 years. So you think that conceivably somewhere down the road, a company like, Regal, could get whacked pretty hard, based on these long-term trends that are unfolding.
Look, I mean, you can do a lot by upgrading your technology, by cutting costs, by acquiring weaker competitors. But ultimately, your constraint is going to be declining demand. And I would say the theater chains have a real problem because, to some extent, movies, you can sell rights abroad, you can watch it on video on demand, but that deals the theaters out, right? The theaters have a real problem because they really depend upon people going out to the theaters. Now, here too, you see a lot of theaters now chasing boomers, particularly the smaller brands, those that don't necessarily. I think the big chains will also be following suit in leather reclining seats and food delivered to your chair and wine tasting and hors d'oeuvres. And I mean, I see some of these theaters turn this into a very luxury, deluxe experience for an older audience. I think also there's going to be a lot of theaters pushing the high tech. Obviously, IMAX is something that has to be watched, right, in an actual theater. So I think that's these are rearguard actions. But ultimately, when we get into the virtual reality world, this is going to be done through, probably not in public places, right? Virtual reality, almost by its nature, is going to be something you do on a console. It's probably something you're going to do. I don't know. You may. I know Mark Zuckerberg wants to turn virtual reality, through Oculus into something that's social, but you're not going to be in necessarily a public place to do it. I would say the theaters have a constrained future here.
Yeah, well, it's interesting. You talked about declining demand, and in your piece that you wrote, you're talking about a few of the drivers, including better competition from television, et cetera. One thing I noticed, that you didn't mention, I'm wondering what your thoughts are on it, is what about theft? I mean, you talk about, people that can literally go on their computers and, a movie that's currently playing in the theaters, they can go and watch it for free on their computer at home in the secrecy and comfort of their own home. How much is that, taking a toll on the industry?
I think it's significant. I think it's significant to the extent to which, Viacom and Time Warner and a lot of these companies are spending a huge amount of, kind of lobbying and a lot of effort in Washington trying to get those, trying to tighten up. I mean, BitTorrent and those sites are a real threat to them. I think going abroad may be partly a strategy. You don't only sell directly, but often you get the country to agree on measures to, cut back, at least help cut back on theft. I think it's interesting that China, at the same time that Disney is working so heavily now in sort of trying to please the Chinese government and do a lot of its production over there and so on, that in return China's doing what it can, right, kind of as a quid pro quo to cut down theft. A lot of this theft is promoted on a larger scale, abroad, and particularly I think Asia is a problem. Asia and Russia and places where it's often hard to enforce laws. Yes, that is an issue. I think another issue, and it reminds me, Dan, you recall the piece we did on Millennials Gone Mild and kind of the decline of drinking establishments like bars, right? There's sort of a dangerous, dark places. You can't take a selfie. I mean, it's sort of, it's not where you expect millennials to be really happy hanging out, unlike, those of us when we were that age.
Right.
And I think movie theaters suffer a little bit of the same thing. I sometimes talk to millennials and they say, well, the thing that's weird about movie theaters, they're kind of dark. And they're kind of very unsocial. You go in there and you're expected to just shut up, for 2.5 hours. And whereas you see millennials where they really are in their, the way they love to consume movies is sort of at home, and you get all your friends together and you can talk to each other and you can stop the movie when you want, right? I don't know.
That's interesting. We got a bunch of questions I want to get to before we have to finish up here. So here's an interesting question. Is it possible that a media company like a Walt Disney or a Viacom would try to create a streaming service for their own movies to bypass Netflix?
Yes, that would be, you know, that would be totally just a question of economics, right? It depends how much Netflix is taking, you know, of Disney's content. The problem with that is, and you've seen an increasing number of articles come out in recent weeks about this, is that if the experience of going online is too fragmented, it becomes a real bother. You know, the one hope for Comcast, and I remember when we did our piece on the cable industry, is that there is a need, although I think that the cable industry has an endangered future. I think there obviously is a need for an aggregator, for a really easy to use aggregator. And I think there will be an advantage for you know, Disney or anyone else coming out with their content through an easy to use aggregator. Remember, there's a cost. I mean, you sign up people on your own site, you save money, you don't have to pay anyone else, and you get all the revenue yourselves. But then on the other hand, you're asking people to leave a more major aggregator, which they already use. Maybe they usually go on Netflix, maybe they have Verizon Fios and they're paying, you know, pay-per-view, pay on demand. But that makes it easy for them. You're now asking them to actually start a whole different subscription with a whole new website. I don't know. You have to really judge.
It sounds like it would be the equivalent of like, you know, Sony Music and, you know, 5 or 6 other, you know, having to subscribe to each one of them in order to access the artist's content, which would be a royal pain in the neck.
Well, it would. And, you know, you'd be much better off. I think what you're going to see in this field is everyone's going to kind of congregate around an aggregator. I don't know if that's going to be Comcast or Apple or, you know, I don't know, one of these over-the-top devices that it just has to have a good enough interface. And I think there are real economies of scale there. There's real network effects. Once one really works, people will kind of, and you know, it's priced reasonably, people will tend to use it.
Right. Here's a question for you, Neil. Will the decline in media stocks that own these studios be a slow bleed, or is there a catalyst that could potentially trigger a bigger decline?
I think it's going to be a slow bleed, and I would just add on the positive side. I think that and I just see this generally. You know, you look at what actually works really well in entertainment right now. Interestingly enough, the most profitable forms of entertainment now are in-person stuff. Right? You can't pirate that. You can't. You know, you can't duplicate it an infinite number of times and push down its value. So if Taylor Swift is appearing at a concert, or you actually go to, you know, Universal theme park and you do all the Harry Potter events, or you go to Disney World, here's the interesting thing. Theme parks revenue is actually rising as a share of revenues of these media companies, right? And the same thing with the music industry as you know, streaming just eviscerates itself and becomes less and less important. More and more artists are getting their revenue through finding more and more creative ways of creating a personal in-person experience. You see concert tours now, again, and music festivals rising as a share of income for most groups. And this, again, I think is kind of an interesting kind of millennial thing, where you have a lot of millennials who love to go in person to see these groups. They don't really expect to pay for digital stuff, but they do expect to pay, you know, to see someone actually live in person. You know, an interesting kind of a further example of this is the incredible success in recent Broadway hit musicals. I take a look at the total revenue expected from, you know, Phantom of the Opera or Lion King or Wicked. You know, Hamilton has just come out. People are saying that Hamilton, maybe at the end of 2 or 3 years, could be $1 billion. Some of these other musicals are $4 or $5 billion revenue. Well, they have obviously costs. They have to be produced in many different cities. You got to pay for a cast, but the aggregate revenue of some of these musicals is absolutely stunning. And these are all in-person events, but they're stratospherically above the top revenue for any, you know, box office revenue for any movie.
You know, it's interesting you bringing up the you know, Broadway and theater, because years ago when the movie industry, when people actually went to the movies and it just was introduced, people thought that was going to spell the end, that it was doom for theater. And here we are decades later, and people are still spending tons of money in the theater. So maybe movies will figure out a way to reinvent themselves along the ways that you were suggesting.
I think it's coming back. Even the whole concept of branded entertainment. You remember, you used to have the Lucky Strike Parade, or Mutual of Omaha's Wild Kingdom, and
right.
I think I said that a lot of these things that we thought were over forever because everything was going to be funded by this very liquid market for ads that were just going to be pushed into everything.
Right.
I think now we're seeing going back to some of these creative old ideas, in-person entertainment, branded entertainment, and other things. The future is going to be very interesting, and it's not necessarily the future we all anticipated.
Right. Here's an interesting question. Could ticket sales be in decline simply because movies aren't that good anymore? What do you think?
If you're asking me personally, I would say amen to that. But on the other hand, I don't think my personal taste is what's operative here.
Right.
I think that there are a lot of older viewers who would unquestionably say that. I do sometimes think there is just simply a lack of talent. What always amazes me, and I particularly see this when I see sequels being done, and you can just call me a cantankerous boomer on this issue if you want, but I'm always amazed at how they take an old movie with wonderful dialogue, nuanced character development, and then they add all this CGI tech, to make it like, really kind of sort of a little bit more stunning, right, in its look and the tech. And they completely obliterate all of the interesting conversation, everything that's verbal, everything that's nuanced, everything that develops depth of character is completely taken out of the movie. So I often find, almost as a rule, these old redos and sequels of old movies horrible disappointments. I never even watch them anymore. And so this is a turnoff. It's almost why we have this almost separate market of movies now for boomers to keep them interested in the box office. They are profoundly uninterested in a lot of the new stuff that's coming out targeting Xers and millennials.
Right. Final question for you, Neil. I think you touched on this earlier. Maybe to elaborate just a bit. What can change the decline in ticket sales? For example, some theaters have changed to a model, more user comfortable model, love seats and wine, et cetera. Is that the future?
I think it's yes. I think it's a particular future that now appeals to a lot of older viewers. This is kind of the way boomers always wish they could have seen movies, right? You get your wine, you get your dinner. I don't know, probably in Colorado you can even smoke some dope, with your movie. Watching.
Sure. That's what the boomers like to do, Neil, right? The Woodstock generation that you're a big part of. I'm kidding.
Well, I maybe as it was meant. You watch the Rocky Horror Show, or you do. Some of those great vintage movies to make them interesting. But I think that's the trend right now. I don't know if that luxury, kind of more expensive luxury route is very good for millennials. A, because they tend to be turned off by things that overtly suggest luxury. It's kind of a dirty word for a lot of millennials. And secondly, they don't have the money. So it's going to be hard to get a lot of millennials to go into a premium priced, upscale sort of, movie and dining experience.
Right. Last question I have to ask. 10 years from now, or let's make it 15 years from now, are people still going to movie theaters?
Oh, sure. Of course they'll be still. I mean, this is a medium that will be, I wouldn't say with us forever, but these mediums never disappear. They get squished down and to some extent, replaced by other things, but they continue. I mean, we still read books. We still send telegrams, from time to time. Nothing disappears. And I think there always will be a demand for movies. I do worry a little bit what movies are going to be like. The theater movie where you actually go into a movie theater and watch a movie, the box office movie, once boomers are no longer a market. I do really wonder what kind of movie that will be like, and whether there might not be some alternative venue or new technology of watching movies, because I think it is the boomer viewer that's kind of keeping the real interest up.
Great stuff, Neil, as always. You can read Neil's entire piece. We'll tweet it out again. It's about everything, and the topic is the decline of the film industry and its investing implications. Neil, thank you so much.
You're welcome, Dan. Great to be here again.
Take good care.